Hello and welcome to our expert webinar, the AI trends in fintech that are changing digital economy job roles. Today we're speaking with Rishi Mehra, CEO of Wishfin. Before we introduce Rishi, I'd like to cover a couple of things about how to use the controls. Please put your questions for Rishi into the Q&A box. And Rishi, if you'd mute yourself for a moment, I think we're getting feedback.
Right.
Please put your questions for Rishi in the Q&A box. We will log those, and when we reach the Q&A part of our presentation at the end, he'll be able to address those. If you have comments for him, please put them in the chat, but address them to all panelists, otherwise he won't see them. And we're going to be doing several polls. I'm going to start with this one, which is one we ask at the beginning of each of our webinars. And the two questions are, how much experience do you have? I'd like to get a feel for the audience of whether we're speaking with working professionals or people just entering the workforce. And we also like to check your kind of well-being. We know that this is a critical time, especially for our audience in India. So we want to know whether you're doing well and staying safe. So we have 4, 3, 2, 1, and the poll is complete. And I will share the results with you. We have an experienced audience today. Almost half are 5 years and more of experience. And fortunately, the vast majority of you are doing well. For those who are not, we hope that things will get better. And we hope that the webinar actually will give you information that you can use. And so let's go ahead and introduce Rishi. So Rishi Mehra, you see on your screen, is the CEO of Wishfin. He has over 15 years of experience, has started more than one company, and has emphasis on product innovation and customer service in IT and in finance. And his master's is from Durham University in the UK. So welcome, Rishi. It's great to have you today.
Thanks, Stuart.
Before we start, I'd like to get an orientation for you about the audience and their familiarity with fintech, so that you have a feel for, what you need to address. So I'm going to start the second poll here. And if you work in fintech, great. If you're very familiar with it, great. If you're not familiar with it, that's important information for Rishi to know so that he can familiarize you. And if there's any disaster with my web camera today, it will be because I have a cat who may jostle it. So please don't be surprised. And we'll finish the poll in 10 seconds. And here are the answers. So half of our audience is unfamiliar with fintech, but we do have some people who are working in the field and others who are familiar with it. So that gives you, Rishi, an idea of who we're talking to. And what I'd like to do is allow you to introduce yourself in terms of what does Wishfin do and how do you do it?
Right. Hi guys. Thank you, Stuart, for putting this all together. And the idea to make people understand and learn and how to grow themselves as a part of an info, tech circle and functions like that. And I'll be glad to share my my experiences across. So I'm part of Wishfin. We founded this in 2016. Wishfin helps consumer make responsible financial decisions. The idea is customer has wishes and there is an end to meet to wishes. So end to meet wishes can be both by taking credit or by helping customers understand their financial balance sheet and make them safe so that they can make this financial decision which is right for them, either taking it by credit or by saving small amount of money so they can own the product and themselves. So when we were creating this idea, what we understood was that a lot of times when you're trying to reach your long-term goals, it is very difficult to maintain a life cycle or discipline for 15, 20 years. That's why, when you look at a lot of people who try retirement plans, etc., on that period of time, at some period of time, they do not see the value of it. They see evaluate it too often, and then they realize that they will not make it, or some of them just do not bring the enough money that is required for their retirement plans, etc. So that's where we wish when we realize that we have to eventually analyze people, have to segment them and understand them, use a lot of tech, and understand them by understanding their credit history by giving them the credit report free, which will make us enhance our data sets. When we are able to enhance our data sets, we'll be able to work much more, better for them to understand where they are and able to guide them. So that's what we wish for now. We currently help a lot of consumers. There's about 7 million of consumers who've taken credit report from us. There has been, we help disperse about, 100 million loans in a year. So that's where we are about. Yeah.
Wonderful. So given that about half the audience isn't familiar with fintech, can you give us a kind of a timeline or how the fintech sector emerged and why it's different from traditional banking?
Yeah. So, the first examples of fintech we talk about, when they actually came to existence, where finance and technology both together, was the invention of an ATM, where we said there is a machine that was built which could talk to consumers on its own and derive results as desired by the customer. So it started in 60s where the ATMs were built, and then a lot of people realized that this whole industry is a very different industry altogether across, because then things changed was that the laptop and the PCs came across. People happened to visit banks and branches in the 70s and 80s to do transactions. They were costly for consumers and for the banks to service them. So now, when you have a lot of cost, for an example, if you visit a bank or a branch, there's a cost to a bank, and bank is obviously going to charge you for the cost in some or some other way, right? Either by taking a upfront fee for that, or having a fee which is a service fee, etc., on that front. So when the computers came forward, so the same thing that you did actually, by visiting a branch, came much cheaper to the bank. So the bank started passing on a much more better buck to you when you're trying to do that. And that's how the fintech revolution started in the 80s and 90s. And this was understood that if you're able to, take the middlemen away, take the middle layers away, you will be able to give much more to the consumer, and the consumer will eventually take it to a next life cycle where we'll either save more, take credit more, and understand, or be able to fulfill whatever is required across on that front. So in the 90s to 2000, the mobile phones started coming in. With the mobile phones, the piece changed drastically, because you need to know what the balance that you need to have. You need to know how much I can invest for a single day. How can I put a fixed deposit in a someday? Where I can invest. I had the Googles of the world which were telling me what was a comparison all about. You earlier, if you had to go to a branch, the physical branch that you had to go, you would felt, it's like window shopping and going to a bank and understand how much is available across on that front. But in the 80s and 90s, internet revolution changed that. And from then onwards, all the models which are becoming successful are on the layer of giving comparisons, giving value add to a customer where he becomes the king, and reducing the cost for customers and reducing the cost of brokerage, reducing the cost of making one single transaction. And that's how the fintech came into the power, right? And it's creating a level playing fields for consumers, creating a much better consumer experience, and ensuring a lot of people are able to save or decide better what they were used to about 10, 20, 30 years. And it is changing to such a drastic level that, we feel that in 5 to 10 years, a physical branch would never exist anymore. It will be a zombie field, across on that period of time. Yeah, so that's the part of it.
Yeah, and I am old enough to remember the savings passbook, which went out of style in the United States many years ago. But when I was a child and got a savings account, there's the little passbook port, in paper form that the bank teller would stamp and write in the amount of any transaction. And now, of course, it's an entirely different world. So,
Correct.
what has changed in fintech over the last year? Now that we've been forced into isolation to work at home, and non-contact models, what are
Yeah.
some of the big things that have changed over the last year?
Yeah. Over the years, when we were talking about fintech and people be able to make decisions on the internet or on a mobile phone, what first thing that was required was that when you have gone into a pandemic where touch, or getting closer to people that you don't know, how do fintech could solve that? And with the help of artificial intelligence, onboarding a customer, right? That was one big problem area, because you had to had in initial stages have to take up a physical photograph, have to make somebody sign something like that, and then the bank wanted to understand whether the person who is signed is the same person or not. So the impact of that of onboarding, was typically happening from a long period of time. But during the COVID, people also understood that while they're trying to buy something from a bank or they're trying to do a transaction, it has to be, there has to be no contact. And so the first thing came forward was that, the fraud detection of is the person who wants a product is himself has taken a drastic leap in a country like in India also and abroad also across on that. So during the COVID, the first problem was solved. Then the problem was if you're trying to operate an account, open an account, can you open it just by doing 3 clicks? Yes, that made possible. That was existent earlier also, but fintech ensured that these models became robust. They ensured that even if there is one single last signature required, was taken away. And why was it taken away? That it was able to understand with deep learning that whether the photograph that you're giving, right, or you're taking a selfie and you're attaching a document, can a deep learning understand it's the same person, right? Can from your mobile phone understand the geographical location of yours and tagging you into that profile to understand whether you stay rather than doing a physical verification. So these are the major trends that have happened across, and what has happened is entitled to a lot of consumers to make transactions easy from their end, from their homes or from their mobile phones.
That last point, by the way, is a fascinating aspect of fintech, and I had heard about it only recently in the notion that facial recognition, which is very controversial in a lot of countries, um, is a really useful tool in your sector because it allows you to verify identity in a way that's much, as you said, much simpler than trying to use other types of verification techniques. And yet, as I mentioned, it's very controversial in a number of countries because people associate it with surveillance and privacy invasion and that type of thing.
Yeah.
But
Yeah.
it illustrates how different technologies or the same technology in different applications can have wildly different
Correct. So I have
slopes.
my yeah. So I have my viewpoints is that once you're onboarding and you're allowing these apps to take privacy, you should onboard it only while allowing these apps when you're taking up a decision, not giving them a free access all the time. That
Exactly.
helps consumer maintain its privacy and ensure the juice that you want to take out of from an onboarding function helps you out on that. But otherwise, what happens is that if you're trying to take up a product and you're an in pandemic or non-pandemic and going to a branch, if you can do it, but it becomes much easier. And there are times when a lot of these fintechs will never have a physical address. They will never have a branch, right? And if they're offering a 0.5% higher interest rate for you, you might it will be lucrative because they don't have a branch. Just saving that cost, right? So to save that cost, if that is required, and if you can maintain your privacy, if your fintech player allows you to maintain your privacy in the control that if you have it at the time of the use, I think it becomes a win-win for everyone.
Mm-hmm. Yeah, that an excellent point in the difference between a permission-based privacy exchange and a permissionless um, use of personal information. Um, so what we're looking at coming ahead, and I think that the name of the webinar uh, is looking at the trends coming, both in this year and in future years. What do you see coming ahead in fintech? How is that going to change both, the way you do business and the people you need to help you to do that?
Yeah. So technically, we see all the big banks and the fintech players. They are going to become, either they're going to, get deep involved with each other, build products for themselves, or have these APIs where they get, integrated with each other and try to bring a customer experience and move out of the branch, the ATMs, in everything that is required at that period of time. So as we've spoken earlier, yes, that was one part of it. The second part is that we would move down to a structure where a lot of open structures will be available to customers, where they'll be able to understand how their money is being kept, where it is where it has been invested, having a clear understanding and reducing fees from the consumers will become very prominent, as there is something called direct plans in mutual funds in India, which has become very popular, right? And then there are even on there is something like called ETFs, and then this is all about doing it yourself and save money kind of propositions. Which has also changed a lot of stuff in even when you do stock trading, like the Robin Hoods of the world and India Zerodhas of the world have changed, ensured lot more youngsters come into and do trading, which I mean, I may have my different views on that, but giving an access is what fintech's been able to do that. Make them understand, make them be part of the society, which was considered as to be, championed by a few people who were not data driven, right, and who were just giving advice on the 5 or 7 rules across on that front. So that's what I see a large term change across on that front. Yeah. The next part that I see is that, as there was somebody mentioning in the blockchains would, be a part of these whole ecosystems and change a lot of stuff, the way we do banking. And it's a matter of time, about 2 to 3 years, where blockchain will become the basic structure where the banking would start working across on that front. And whatever infra that you see at this period of time would change across very quickly and very, yeah. Sorry, I can't hear you. I think you've gone on mute. Yeah.
Yes, I apologize.
Yeah, no.
And we think of blockchain as cryptocurrency now, but we're also it's beginning to penetrate the popular consciousness with things like NFTs, and people are beginning to say, okay, well, it's not just Bitcoin; it must have some other use. And so I think as more people understand what it can do, the acceptance of different applications of it is going to increase. And that's just one example of a particular technology. There's so many. Um, when you look at these trends, how do fintech firms position themselves, and what kind of plans are they making to take advantage of these trends? Where do you kind of see them, um, you know, trying to bring new services to consumers and borrowers and
Yeah. So, so with the software and the invent of software and artificial intelligence, the fintechs are the difference between fintechs and the large banks was that fintechs were driven by technology, right? And the banks were serving customers. That's what I see that to cross. Banks started quickly, they started serving customers. Fintech said, let's talk technology first and develop a product, and they would go to a consumer. So the first things largely that the fintechs have been able to do, and there was a person asking a question across on that front, that how do deep learning, solve a lot of frauds across on that front, right? What we figured out was that the first thing that they solved was that fraud detection, understand the same person who's trying to onboard is the same person. With deep learning, understanding of you being able to take your photographs and crack it into a million bits of pieces, and you, even if you have a beard around it, and being able to understand that's the same person. This was not possible at a period of time which was before it could you do it with deep learning. Now when you are able to match, and you're able to match in that in 2 5 seconds. I'll give you an example. If you go to Facebook, they're able to recognize in any photograph that has been posted by someone that you're tagged in, right? Imagine in billions and billions of those photographs, where the tech being able to understand this is your photograph and you've been tagged to, and the fintechs will have that kind of technology pieces will be understand that this is the you person, and they'll be able to understand, oh, your product is being used or you are being used across on that front. So that's where it's going to detect the and ensure that the fraudulent practices become much reduced, because machine learning and algorithms are able to understand and identify what people are trying to fool the systems. So that's the first part. Second part is that they will be able to solve and segment consumers as per what they need. Typically when fintechs came in space, we realized that there are a lot of consumers who's at a period of time are taking their first product. They don't have a credit history, right? They are underserved because everybody wants to serve. The banks said they want to serve a person which has a high FICO score in US or a high credit bureau score in India, across on that front. But how much percentage of that people across on that front? So fintechs were able to understand that even if you serve to a guy who is under at who's not a perfect score, but he can make money for you and you can revive his career life cycle, right? Is a perfect win, which can only happen if you use technology and artificial intelligence by branching out that customer, right? If you're not able to branch out and segment that customer very well, nobody will be able to win. Either you will charge him higher rate of interest, which he'll never be able to pay, or you will be able to put him in the right segment, which the interest is fine for him, and he can get that credit and move his life cycle more and pay that credit, and the financial institution and the individual both have a win.
there's an interesting parallel phenomenon, um, from the 1960s in the U.S., which is the emergence of what were called junk bonds. And the reason I bring it up is because the insight that people had, like Michael Milken and others, was that companies that couldn't get credit, couldn't get access to the bond market because they were too small, didn't have the kind of reputation, were nevertheless excellent credit risks. And so Milken and others created the market for high interest bonds that these small companies could borrow with, and they knew they were on average good for them. Um, this was a early data driven type of application, but the data, of course, was slow in coming and not in real time. And what's different today is that you can make that same kind of determination with AI and the deep learning, and being able to look at somebody who you said, as you say, doesn't have the traditional banking parameters of
Yeah.
he's a good credit risk,
Yeah.
but you can tell from other data that is less obvious
Yeah.
that the AI has told you he's a good credit risk. The old cliche is that um, if you want to get a loan from a bank, you have to prove that you don't need it,
Yeah.
and that was the old attitude. And now, um, because of fintech and firms like yours, people who need credit and can't prove that they wouldn't otherwise need it are able to access it. And this is a
Yeah.
revolutionary change.
Yeah. So, in fact, one very big understanding that we got in the last 3, 4 years was how to expand the market. And, what we realized was that if you go for the perfect score for the banks, the market is 1% of the total market. And is it profitable? Because those people would want, credit at a very minimum rate of interest. So what we realized was the market is not eventually about having the least default rates. The market is to understand how big that you can create market. And even if the default rates are higher and the consumers are taking that credit even at that higher rate and able to return that, is trying to create that kind of a market. So, and that was not possible if you do not have, large sets of data. A lot of people think, and this is for a lot of people who want to be in the fintech industry, where I would want to add across. Uh, see, a lot of people think, the AI and fintech will be able to make decisions very quickly across on that front. But AI and everything is all about how much data that you can produce, right? And there's some sets of data that is available with you with your credit history reports, right? There's some sets of data that will be available with you on the phone, the kind of contacts you have, the kind of, the transactions that you're doing monthly on your credit cards, and the kind of transaction that you're doing on your debit cards, and the kind of phone pay bills that you're doing, or electricity bills that you're doing. And if you can put all together, you can cluster a guy into a segmentation, and then when you're able to cluster a guy, then you can actually identify him, what is the kind of a quality of a customer that he is, and what is the quality of that he can pay across. So that's where the whole invent lies, not just in the large set of data that is available, and then you have to understand and even identify the social behavior and stuff like that. And the other thing that we would really want to talk about is the biases that we create in the artificial intelligence, or or the biases that we had created earlier in the rule-based engines, right? In the rule-based engine, they realized, oh, somebody, like for an example, which has no credit is not going to like do well, right? That was a bias across, and there was bias across male, female, on color and everything across. But when artificial intelligence able to pull out, or a machine learning are able to pull out sets of individuals and match out to them and understand that what the behaviors are, they're able to take all those biases. But even in you're building up a model, which is a credit model for a large institution, people who want to work with, they need to understand as much as data they can impanel in that data sets. That's where they will reach a perfect situation where they'll be able to pick, predict, and figure out what's the best for the customer and for the manufacturer or the lender.
Yeah, that's an excellent insight, and that this is one of the areas of AI in general, of understanding biases. And what you're saying is that on one level, it fights the biases that pre-existed before AI. And then the other challenge, of course, is to make sure that they don't get replicated, or the new biases aren't
Yeah.
uh, introduced. Um, so, moment. Um, how has all of this changed the needs of fintech firms for talent? I mean, where do you need to bolster, or what skills do you need to search for in order to be able to scale up and continue to expand?
Yeah. So see, there are the fintech has 3 or 4 more challenges across on that front. The first is customer onboarding, right? Then is about creating a perfect UI UX, right? For that, so that it is easy across the end function. And then there are the needs of a physical structure, building apps, talking to APIs, stuff like that. So there is a different sets of individuals that would be required to create these APIs, able to talk to many APIs simultaneously. And these are functional Java and or people who do a lot of PHP and stuff like that. And then becomes the backend, the artificial intelligence, people who know a lot of R, people who know a lot of Python, people who can understand and can build models, people who are statisticians who can physically identify the sets of data, right, and then can produce across on that front. So when somebody looks at a fintech, he doesn't just look at it just only basis on the artificial intelligence. Just do not look at it at everywhere across on that front. So fintechs open that Pandora where a lot of these tech people would be required across those functions, which will help consumer make a better financial decisions. So, but what happens is that the best talent, or the best, remuneration comes from where you are able to give a much better result. Where a lot of engineers who have experience in artificial intelligence, people who are have are able to understand and build these models where this predator becomes, so they are get paid really well across on that front. So while there is a famous thing that I learned all my life, is they saying degrees you pay for, education is free, right? Right. So what happens is, and for to a lot of my friends who would be watching across here in India, is these are perfect platforms like Simplilearn and stuff like that, because this was not available when we were young in college. When I started, this was not available, and this is, and I am so glad that all this is available in such a structured manner by a lot of these players put together. Otherwise, we used to hover 50% of our time to learn the white papers, and then to understand from them, and then to build our own theories around it. Now at this period of time, there are so many of these courses available which you should be able to invest in, because everything that you know is getting better by 5 days. So you need to keep learning again and again. So it is best for you to go all about understand what's new, embrace yourself with new, because typically artificial intelligence will even eat computer jobs too, if you are doing something which was not prevalent across on that front, because that's what you need to understand. You need to be updated. So my understanding to this is that you need to keep start wherever you want to start with, in whatever you like, and then keep learning yourself with such online courses, understand them well, and you will then be run after by the HRs of these large fintechs, where they'll see value into you because you know what they're actually looking at. So to be prepared for a person who's trying to make a career in fintech, he needs to understand that he needs to do as much as he can and understand a lot of these courses, and physically understand where he wants to be the perfect match in that criteria. Yeah.
And being here in California today, I'm reminded of the image of surfing, which is, you have two choices when you're surfing. You can either ride the wave and rise up with it, or you can get swamped by it. And when you talk about how artificial intelligence affects careers in technology, um, if the wave is that artificial intelligence can do more and more of things that humans once did, um, your challenge as a technology professional is to surf that wave and stay in the sector of things artificial intelligence isn't ready to do yet, or in the domain of finding the interesting problems and defining the problems that artificial intelligence needs to solve. So there's always
So
more and better work to do.
sorry, I'm
Go
so
ahead.
I have a viewpoint in this is, see, when electricity came, a lot of things changed. You know, in 20s, all those manual things that we require people to pull, push, right, was changed by electricity. I think.
Exactly, and you know, steam power before that, and since that, computing. So all of these things where we said there have been a number of projections that said from the 1950s that by 1980 all of the women in a particular society will have to be employed as bank clerks because the amount of paperwork to be done will be so vast. And in any time that you look at a projection like that, you have to recognize that no, the world will be changing, and there will be ways to solve these problems so that people have other better things to do. And that's really the kind of thing that we're looking at. So we're getting to the point, I think, where we might want to ask the Q&A questions. You did have a couple of poll questions queued up. I didn't know whether you wanted to ask one or more of those.
So I think I covered them across. So if there is any question that wants to be covered, so I'm happy to answer that.
Okay, so we'll go into the question and answers. And for this, we've had folks who have been looking at the chat and the Q&A and putting together some of the list of questions. So I'll ask some of those and see if we can cover as many as possible in the next 15 minutes. So Vaibhav asks, Rishi, how significant was your master's degree in your current role? Would have you been as successful without it?
Good question. See, that opened my eye. I had a very different view, and without being able to understand world from outside India, I wouldn't have understood what the pace it was changing down to, and having the understanding basically of how the world will change down to. So the first point was, I was looking in India, and in that period of time, I thought, oh, this is going to take 10 years and 5 years and stuff like that. So when I did my degree, I understood that this is going to be cheap, and everything is going to hovering around giving best services. And when I learned about that, and it opened my mind, that's what changed, and that was a very drastic change in my career and life cycle.
Okay. We have Sandeep who asked a question. They finished a certification program in data science, and they're looking for opportunities. Where would you direct them? Sandeep.
So if he's done data science, I think there'll be a lot more opportunities in a lot of payment banks, a lot of opportunities in a lot of credit risk model companies in the fintechs which are defining about credit. All of them are hunting about them because data science is something that everybody needs, and there's a lot of less talent available even at this period of time.
Okay. We have a question from Sandra who asks, how can fintech help a young entrepreneur who hasn't yet completed their degree?
Can you repeat the question?
Yeah, Sandra asks, how can fintech help a young entrepreneur who hasn't yet finished their studies? Is that something that looking away from the biases, right?
So see, fintechs will be maybe able to make them understand and get them some credit to finish their education. And if they need credit for that, because they might look at them and understand them, they are bright students and they'll be able to make it out. and then give credit across on that front. So I see that as a perspective as that period of time. Yeah.
Okay. Shubham asks, would you agree that Indian fintech has been following mainly well, let me read this question again. Would you agree that Indian fintech has been mostly following an East and West market strategy for its business models? What are some of the areas that are unique to India versus the rest of the world?
Yeah. So see, in India, yes, there are models that were started in the US, and some of them were got copied in India, and they were implemented. I think that's a very different structure, but a lot of these fintech models will not be successful if you go local. Because if you don't understand your own understanding of consumers, or you're not able to understand that India is a price sensitive market. India has people who can't read in one simple same language. They are about more than hundreds of language where consumers understand that, and if they are not able to address that issues, they will not be able to bring a large market to them, because a lot of people feel like the English is a language. But if you are actually able to understand the languages of people, and there are people who have a lot more money available to them, there are HNIs also, but they're not able to understand that. So I think an Indian strategy is to identify the large market, build a lot of consumers who were not into in the mainstream on the structured data. So that was something that was required differently. But currently, we don't see somebody being able to do that successfully. But yes, a lot of them are trying, and hopefully within the next 3-5 years, when the data would get available, we would have clear winners which have originated from here.
We touched a little bit on this in the earlier discussion. Arpita, who's in the YouTube live audience, asked a question: what about ethical and economic risks of AI in fintech? What about things like data security need to be worked on or bolstered now?
Yeah. So there are two different that I think. There is ethical data. I mean, you're able to understand, not able to, when somebody is giving you a lot sets of data, you need to help customers understand that they are getting, be open to them, what you have an access to them. So that's the ethical part of it, not covering it with the UI UX layers and saying, I'm just creating this new picture and I'm creating all your contacts and everything across on that front. So once the ethical part of it, and then there's putting data security layers, so that if there are people who are trying to hack into your systems, you are able to protect them from getting leaked across.
Related to that question, another question from Jadid is, with more people coming in, more consumers using fintech, and more fintech firms, what type of fraud prevention is becoming more important or coming to the forefront, and does it depend on deep learning?
Yeah. So I think I answered. Fraud prevention is two elements. One is customer onboarding, and secondly, when when a transaction is getting built, right? The transaction is carried by the original person is the first thing that you need to ensure, right? So there were typical models of on a mobile OTP which are being taken away by a lot of fraudsters, and understand them. So those things are going to get changed very quickly, and the deep learning is going to understand whether the transaction that you're making, the time that you're spending on a mobile phone to click a screen, how many multiple times that screen is getting clicked, right? And understanding your early behaviors and saying that you're not withdrawing such large money, right? So that deep learning models will be able to identify all these frauds coming across on that forefront. So there's the two parts that I mentioned. Is what once you onboard, you identify this is the same person who's onboarding. Secondly, when he's making transactions, you need to make secure about him, and nobody else should be able to transact on his behalf. Is where the winning happen would from a fintech point of view and from the deep learning point of view.
Mm-hmm. Yeah, and as you mentioned, you can see some of the parameters that identify him by behavior or other factors.
Correct. There are
That
thousands and millions. Yeah.
Go
Sorry.
ahead.
Yeah. So say there are thousands and other methods, because it's again about your access to which device, you logging into a device, your time taken to actually fill a password, your time taken. There are the millions of factors which fintech will be able to evolve. Saying that from your login, where you're copy pasting, you can actually figure this out. If but it is that the fraudsters are sitting day in and day out to figure this out, right?
Yeah,
They have more time than actually people who are actually preventing. So
that,
they overcome.
that's a good point. That
Yes. So because from them, this $1 billion for an individual, it's a hundreds of rupees or a thousands of rupees. So his incentive is much higher,
yeah,
right? So he works much more than that. But that's where fintech would be able to identify on that front. Yeah.
excellent. Yeah, and I'm sure that some AI is saying that um, anybody who's trying to identify as Stuart online isn't really him if he doesn't have to enter his password attempts at least 3 or 4 times before he remembers what his actual password was. Um,
Yeah.
Vineet asks, and this is, I think, fundamental to your business model, um, but you might want to just recap, because I think one of the aspects of the people in the audience is understanding the practical way that technology works within fintech. So the question Vineet has is, when banks offer personalized offers to customers, are they looking at our behavior, our spending, our balances? What are what are the factors that you're building into the um, the AI model that says, this
Yeah.
is the advice we want to give you, these are the offers we can offer you?
Yeah. So traditionally, banks used to work on the ability to pay and the intention to pay. So the ability was how much money that you have, and your credit history would say your intentions to pay. These were the two parameters that started in 90s and 2000s across. Now these parameters are changing across on that front, where they're building and saying that they might look at your current income and versus your current credit history and your available income, so that you can take credit to. So they make personalized offers to you where they identify that you have money that you can pay for the next few years with the kind of industry that you work in, with the kind of remuneration increase that they're looking at to you, and they're quantifying and qualifying you with those offers based on that. And with a lot of artificial intelligence, people will be able to identify that, okay, there is a person who's improving, has from last 10 years that if even got to a 25% raise every year. He's a bright guy. They'll be able to identify based on regression. See, regression, functions were very prevalent till, machine learning takes over, which is able to predict also much better. Regression can tell you from the past data, right? Where the machine learning can build that past data, accumulate your behaviors, and identifying the future scopes, is able to predict a future and able to give you credit without having much hassles for you in building up documents and stuff like that.
Yeah, and that's an amazing thing. Having just completed a refinance of my home mortgage, it's an amazing difference in terms of all of the documentation that was required, all of the verification that was required, and things that you would think that data would be able to cover, and that would be available to the institution without my having to furnish it. So I'm looking forward to, the spread of fintech to make our lives easier. Um, and so what are the fundamental, you touched on it before, but what are the fundamental technologies, the different technologies, again, if you could recap, that you use in the fintech industry? What are the particular platforms and areas that people?
So again, as I defined, it's the onboarding. The onboarding requires a lot of UI UX customer experiences across. Then it is about the backbone. And the backbone is about how do you connect one person to the server connects back to you, gives you a result, which is API, right, across on that front. And how do you do that on either PHP platform, Java platforms, or these other sets of platforms? And then how do you making these decisions happen? The algorithms that we're talking about, the algorithms are running on which backend, how they are operating, how they are communicating, how they're figuring out the results. So these are the three clusters of what you talk about fintechs that are available at this period of time.
Sorry. And we have several people asking about the role of blockchain. How is it currently being used in fintech? How do you see it being used in the future?
Yeah. So it's just the start of the blockchain, right? My understanding to this is going to drastically change everything in the next 3-5 years, right? And what do we see currently? The ledgers and everything would become the basics of everything in the next 3-5 years, or maybe quickly. At times we are not able to identify the change, right? But at this point of time, I would say that only 2 to 5%. It is just acceptability. People are trying. People are moving forward. Yes, the enthusiasm towards a blockchain and being able to adapt, and what the blockchain will be able to do on frauds and risks will be very different what it is currently, and it will become a base which will open the society to an open structure, help consumers a lot, and help banks a lot, help infrastructure costs a lot. Because at a period of time when you think there are millions of profiles of consumers banking into different banks and stuff like that. Imagine a world where everything is all together. You're able to make up a decision very quickly. Imagine a world where you are actually clustered into the right fit, because blockchain will be enabled to do that very quickly rather than having structured data lying somewhere here and where you talk about API bankings and structure like that.
Okay. So it's a transformative technology.
Correct.
Yeah. We have a question from more than one person who asks, how would somebody who's looking to enter the fintech industry, what skills and areas should they be looking to acquire?
So I would say if you want to really grow big, try to understand a lot more, and understand the basics of artificial intelligence and its various subsets across on that front. If you're able to identify and you find interest in them and do courses or able to identify them, that'll be a short, good remuneration package across on that front. Then my second thoughts would be that if you are able to understand, as we were mentioning earlier, the future is blockchain, right? So if you're building something for the next 3-5 years, you need to understand that basics across on that front. Then the highly demanded service at this period of time is how do you build a user interface from a consumer? So UI, UX tech is $1 billion for somebody like that. So it's an interesting thing that the left swipe for someone created $1 billion industry for them. I mean, I think the best thing that anybody could do to a matchmaking industry was left and a right swipe.
Yeah,
Somebody
exactly.
did it, right? And I just want to name the company, but what it did was that the company, it just ensured a lot more consumers came in and they were able to do understand and identify and onboard very quickly, and they really liked it, right? It was a UI UX that made that company, right? It was not right. Everything else was later. So nothing is small. So user interface is as important. If you're able to identify patterns and habits, and there are people who are actually understanding how the thumb is used over a mobile phone, right? And they will be able to identify which is the hotspots and how you just make everything on the app over the thumb rule and make it easier, right? So that's what it is all about. Yeah. So
Yeah.
so
Anything you want people to use should be within the range of their thumbs. Exactly.
correct. So
Yeah. And go ahead.
yeah, so that's the part of it. So I'm just saying all those segments exist in the fintech. So whether it's all the backbone of the technology, the data servers, the oracles, the MySQL servers, everything is required. understanding of the layers that connect to them is getting important and gets you much better remuneration, because when somebody is hiring in fintech, he understands this layer also, then it becomes easier to hire him and give him a much valuable product or resource or stuff like that. Yeah.
Okay. There was a little bit of a break in your voice when you mentioned that last point. So what was the thing that you said that was very important in that?
So I was saying is that understanding all the three layers, or understanding and putting all layers together. So
Okay.
if if you know a database server, and if you're able to communicate with the APIs of different service providers, and if you can do it with a segmentation and do analysis on the database in terms of any small programs on Python and stuff like that, makes you much more important and one man army in a company, and gives you a lot more recognition and remuneration.
So it's basically understanding the full stack of the fintech world, to use a buzzword. I think the last question we have time for is from Ikanch, who asked a kind of a very broad question, but what do you think the world will look like in 2050?
So I will say, we will be all wired. That's my understanding.
Mhm.
So all your data, all your movements should give you health and be able to give you much more health, because of that you will being wired in terms of inside your body. Right? Based, that's what I see. Uh, we are already cyborgs. Right? We use our mobile phone.
Yes.
Right? It'll become a part of your body. That's what I see. And based on, you'll be monitored. If you want an access, you will be given a free service. If you don't want an access, you will be charged for it. So that's what I see. So as a background, and in terms of fintech, I see that there will be never there'll be only an apps, which will do, and maybe apps would be redundant at that period of time. They'll be able to understand what you're looking at and be able to give you a solution much before than you think.
I I absolutely agree with you, and I think that we will get to that point in steps. And one of the steps, and we've seen it attempted, but one of the steps will be adding a layer outside of our bodies, in our clothing, in our eyeglasses, um, yeah, and other aspects, so that um, how we move, where we go, what we see, what we hear, and what we say can all be, with permission, of course, be fed into the AI that will be helping us. And then once we're comfortable with that, as you said, I do believe people will look for ways to make that more permanent by moving it inside the skin rather than just being the outside
Correct.
shell.
Yeah.
So it's an interesting world, and um, one of my hobbies is writing science fiction screenplays. So you probably just given me an idea for a new movie, but any, um, this has been a wonderful discussion. We're at our time. And so what I want to do is, before I say goodbye, I do want to share a couple of things with the audience about upcoming information. And let me do that here. Here we go. So we do want to ask one last poll, and I think it relates to something that Rishi mentioned about what you need to do in order to stay ahead of um, the tide of technology. So let me this. So two parts to the question. What skills are you interested in learning, you and the audience? Um, what skills do you think will make you more valuable, either in the field you're in, or if you want to pivot into fintech, or whatever you're preparing for in our digital economy? And then when do you think you'd want to start acquiring those skills? Or as people say, when would today be the, I'm sorry, when would today be the best time to start? And all right, we'll close the poll and share the results. By far, most people are interested in data science and AI. And a good number of you have said that yes, today is the best time to start. So with that said, I would like to thank Rishi. I've given here his LinkedIn contact information, and I'll leave that up on the screen for a bit. But he's been very generous with his time and his knowledge today. And so, again, thank you, Rishi, for
Thank you so much. Thank you. Bye-bye.
Appreciate it. Okay.
Thank you.
And we're going to conclude the webinar with a reminder that we have a skill up program that Simplilearn has introduced. The skill up program is access to our self-study materials, separate from our live virtual classes and other blended courses. Oops, sorry. Oh, sorry. And I'm going to put into the chat again the link to that. So over 300 in-demand skills, video self-study content in a number of different technologies. And you can go to the link that's in the chat and get to our skill up pages. And if you find value in that, we then hope that you will proceed on with your Simplilearn training into our other courses. Our next webinar is with Ritu Chakraborty. She is the co-founder and EVP of Teamly Services, and that's part of the group with Freshers World, expert on jobs and job placement. And she is going to share with us next Tuesday. It's a morning webinar, different from most of our webinars. Morning in Indian time. And this is expert tips on making 2021 the best year for your career, which is maybe counterintuitive because it doesn't seem like a very good year so far, but she has advice for you on how to turn change to your advantage. And that's also in the chat. You can take a look there, click on that and register for that webinar. Again, it's Tuesday, May 4th, 9 a.m. India time. In North America, that's an evening webinar starting at 8:30 p.m. Pacific time. And I apologize for the mistake on the slide. 8:30 p.m. Pacific time, 11:30 p.m. Eastern time. We don't expect a lot of people to be staying up on the East Coast of the U.S. But having said all that, we thank you all for being here at the webinar today. And we hope that you will keep in touch with us on our social channels, Facebook, Twitter, LinkedIn. You can pretty much find us by just typing Simplilearn. And we hope to see you at future Simplilearn events. And we hope that we can help your journey to gaining more skills for the digital economy. That concludes our webinar, and we thank you very much.